Welcome back to my channel where we break down money moves that impact your financial future. Today our topic is the new US tariffs on Canada and Mexico. A 25% tariff is about to hit, and if you think this only affects big corporations, think again. This is going to influence your investments, inflation, and even your personal wealth strategy. But before we get started, let me remind you, I am not a financial advisor. This video is for educational and informational purposes only. Always do your own research and consult with a professional before making any financial decisions. Now let's get into it. Asterisk. So, what should you do to protect your money and capitalize on this situation? Stick around because I'll break it all down. So, what's the deal with these tariffs? The US government is imposing a 25% tariff on imports from Canada and Mexico starting this weekend. Officials claim this move is to control illegal immigration and fentanyl trafficking, but the economic impact is what we need to focus on. Trade between the US, Canada, and Mexico is worth over $1.5 trillion annually. The Canadian dollar just hit a 5-year low due to fears of an economic slowdown. Investors are getting spooked, and frankly I don't blame them. The Mexican peso is also dropping as investors fear supply chain disruptions. Higher costs for businesses mean higher prices for consumers. And what happens when prices go up? Inflation. This is going to affect everything from the price of your morning coffee to the cost of your kids' college tuition. So how does this affect your wealth? Let's talk about it. First up, let's talk about inflation. When tariffs are imposed, the cost of imported goods goes up. Businesses have to pay more in taxes and pass that cost down to you, the consumer. This means you could see higher prices on everything, from the avocado toast you have for breakfast to the latest iPhone. We're talking about food, electronics, cars, clothes, you name it, and don't even get me started on gas prices. This increase in prices could slow down consumer spending. People start thinking twice about buying that new TV or going on that vacation. And when consumer spending slows down, it affects company profits. Higher tariffs equal higher costs equal lower corporate profits equal stock market volatility. And that's what we're going to talk about next. Chapter 3. Best hedging strategies for investors. Alright, let's talk investment strategy. How do you protect your wealth in times like this? Here are 3 key strategies to consider. First up, invest in commodities. When inflation rises, commodities like gold, oil, and agricultural products often hold or increase in value. Second, look at defensive stocks. These are companies in sectors like healthcare, utilities, and consumer staples. These companies tend to perform better during economic uncertainty because people still need their products and services even when times are tough. And finally, diversify your portfolio. If you have heavy exposure to US companies dependent on Canadian and Mexican trade, consider diversifying into emerging markets or industries less affected by tariffs. Remember, diversification is key to long-term wealth building. Don't put all your eggs in one basket. Spread your investments around and reduce your risk. Chapter 4. Winners and losers, which assets to watch. Now let's talk about winners and losers in this whole tariff situation. On the winning side, we've got US-based manufacturing companies. Since imported goods are now more expensive, these companies could see a boost in demand for their products. It's basic economics. When the price of one thing goes up, people look for alternatives. And those alternatives could be made right here in the USA. Another potential winner, US steel and aluminum producers. Remember those tariffs on steel and aluminum imports that were imposed a few years back? Well, those tariffs are still in effect and they could benefit domestic producers as the cost of imported metals rises. And let's not forget about commodities like oil and agricultural goods. As I mentioned earlier, these tend to do well during inflationary periods, and tariffs could add fuel to that fire. US retailers that rely on cheap imports like Walmart and Target could see their profit margins squeezed as the cost of goods goes up. Automakers like Ford and GM are also likely to feel the pinch because many car parts come from Mexico. And finally, fast food chains that rely on ingredients from Canada and Mexico could also see their costs rise. If you're investing, these are the sectors to watch. Be strategic with your money. Chapter 5. what this means for your wealth building strategy. So, we've covered a lot of ground here. Tariffs, inflation, the stock market, winners, losers. But what does all of this mean for the average person trying to build wealth? What concrete steps can you take to protect your financial future? First and foremost, cut unnecessary expenses now. Prices are going up, so lock in fixed-rate purchases where possible and eliminate wasteful spending. That daily latte habit? Cut it out. That gym membership you never use? Cancel it. Every little bit helps. Second, increase your income streams. In times of uncertainty, side hustles, investments, and passive income become crucial. The more money you have coming in, the better positioned you'll be to weather any economic storms. Building long-term wealth means being proactive, not reactive. If you start preparing now, you'll be ahead of the game. Stay smart, stay wealthy. All right, wealth builders, that's a wrap. Remember, knowledge is power. The more you understand about what's happening in the economy, the better equipped you'll be to make smart decisions with your money. Now it's your turn. What do you think about these tariffs? Do you think they'll help or hurt the economy? Drop a comment below. I want to hear your thoughts. Let's get a discussion going in the comments. If you found this video helpful, smash that like button and subscribe for more insights on wealth, investing, and financial trends. Hit that notification bell so you never miss a money-making opportunity. Until next time, stay smart, stay wealthy, and keep building your financial future.